we have a huge week, huge week. Pretty much everything is happening this week. It's the week that the market will be quite volatile, lots of movement. Let's start to analyze what's happening. We'll start off with the Aussie dollar from a fundamental point of view. As you will all know, it's the RBA rate decision is always handed on the first Tuesday of the month. So we have our RBA rate decision happening tomorrow at 2:30. Okay, now always on that first Tuesday as well, we get the trade balance figures at 11:30. Also for the Aussie dollar, there's actually quite a lot of data for the Aussie dollar. We have retail sales on Wednesday. We have China data, which affects us quite a lot. We had some Chinese data today, which came in. Manufacturing numbers were down for the first time in a couple of quarters, so it's the Chinese economy not looking as good as it was, say, 12 months ago. So the dollar took an effect on that. So as you can see, from the Aussie dollar point of view, there is a lot of data, and that's just only looking at Australian dollar. Okay, now for this rate cut, how should we play this? What do we think is going to happen? What are the impacts of it? Okay, well, this is what I know. This is what could happen. Now, of a panel of 28 analysts who were asked the question, 24 out of 28 said they believe a rate cut will happen. I'm of the same opinion. I do think a rate cut will happen. The forecasted number is for a cut of 0.25%, which would bring the cash rate down to 2%. Now, what does that mean to the Aussie dollar? And when we have a look at our charts, I'll explain a little bit more. But in essence, you would have noticed that over the Friday and Thursday, the Aussie dollar spiked up and it's basically come back down. The closer we get to the RBA announcement, more and more people are positioning themselves in for this trade. All right. So, for example, a lot of the people that are in Aussie US dollar positions right now, they're basically in early in anticipation of the RBA decision. So, since so many people are expecting it, I'm of the opinion if we do get a rate cut, yes, we will get a drop, but not as dramatically as sort of what it could have been. All right, it's pulled off. It's a lot of it's factored into the market already. The biggest surprise would be if they did nothing. If they said we are not changing rates, we should see a bounce in the Aussie dollar in the upward direction. All right, and the only other possibility is how much they cut rates by. If they cut less than this number, then we could see a rate rise as well. The Aussie dollar increase in value. If they cut beyond this number, we could see it spike down very sharp. Okay, so those are the possible scenarios that are linked around this number. If you've never traded RBA decisions before, possibly it's not the time to start. If you have an opinion, a strong opinion, and you want to position yourself, just make sure that it's within your risk tolerances, and then by all means you can even position yourself into that trade right now. Okay, all right. So that's the Aussie dollar. All right. Now this week, that is coming. The front half of the week is dominated by non-US data, so meaning the movement of the US dollar is going to be dominated by the secondary currencies like the Aussie, the Euro, the GBP, things of that nature. The back end of this week is going to be US dominated, culminating in non-farm payroll, which happens on Friday. Okay, now we are now in our winter mode, so non-farm payroll is no longer at 12:30 midnight, it's at 10:30 p.m. So if you've never seen the market during this time, please log in, have a bit of a look. It gives you an experience of how the market works, the volatility that can take place. Don't expect to get filled at the numbers that you see on your screen, because it's all supply and demand. The market can get very, very illiquid and then explode into liquidity as well. Alright, so that's non-farm. Now for non-farm, now the last non-farm job numbers that we got disappointed dramatically. Everybody is off the expectation that that number is going to go up and it's going to be a better number. Okay, and everybody's anticipating a drop in unemployment rates as well. Now, most analysts are of the same opinion, and they believe, well, predominantly from what happened last week on Thursday, the FOMC meetings, the summary to come out of that meeting was that they basically said that at the moment any rate increase decision is we are really data dependent. Now what does that mean? Everybody knows that Yellen is pro-labor, and her interpretation of data could be data in the way of jobs, or is it data in the way of the economy and the health of the businesses of the country? So it was an ambiguous statement, is basically what I'm saying. That's why the dollar went up, down, kind of didn't do anything, and that's where we're at. So these numbers are going to be very, very important. If they do come in strong, okay, if they do come in strong, it will almost instantly bring back the confidence in the US dollar, and we should see a dramatic increase in the US dollar. So if we were to get a combination for our Aussie dollar, for example, that we get a rate cut by the RBA, and then on Friday we get a very, very strong US number, we could be chatting next week and the Aussie dollar could be as low as, say, 74, 75. Okay, so if we get the right combination, the low for the year so far is 75 something, I can't remember, 75.30, I'll have a look in a moment, but that number will get tested. Alright, now the other major talking point for this week on the fundamental side of the equation is it's the euro, and without talking about the elephant in the room, it's Greece. Greece deadline is on the 11th of May. I believe that's next Monday or Tuesday, where they have to face creditors, and there is an increase in probability that they are going to be defaulting. Okay, now two options are available. What does default mean? They can default and then try and get some kind of a bailout and another sticky tape solution to keep them in there. The other one is they could kick them out of the euro, which would be drastic for the euro. So we've seen the euro bounce in the last week, 2 weeks. It's had a bit of somewhat of a rally, and many people can't really explain it. They're saying, why is the euro doing so well where there's a lot of turmoil? A lot of that is the result of the stimulus program that got incorporated, that started to kick into effect in March. All right, and mainly it's been US weakness. So US weakness has fueled a Euro USD rally. That could all come to a halt. At the moment, if you think about the major, I guess when we talk about currency drivers, all right, if we think about simple supply and demand on currency drivers, what we are really looking for is, where do people move their money into? So let's say that you are an investor and you had $1 million as an example, all right? And now your $1 million right now could be in the form of gold, it could be in the form of equities in a company, or it could be in the form of Australian physical dollars. As soon as you start to get worried that the Australian currency is going to drop, what do you want to do? You want to change the investment vehicle that your money is in. At the moment, if you think about the global issues that are happening right now, we have, for the euro, Greece is a massive burden. So anybody holding euros right now must not be feeling very comfortable. We have the UK elections coming up at this week as well. So anything, if you're holding GBPs or pounds, all right, you're not going to be feeling very comfortable. If you're holding RMBs, Chinese or Aussie currency. We're getting credit problems in China, the numbers aren't coming up good, and it's also a major burden. And then if you put into context the fact that the Federal Reserve, I'm talking about the US, is thinking strongly about raising their rates, okay, meaning strengthening their currency, the natural tendency is that a lot of people are going to want to exchange whatever form they have into US dollars. If these numbers that are missing over here come out really good, we could see the next wave start along. Okay, I've tried to explain it the best that I can, giving you the understanding of the psychology of where the money moves, how it moves, and how it affects our currencies. Okay, all these factors affect it significantly. Please make sure that you note these times for this week. For this week, I'm having a real tough week to see which is going to be the one that's going to move the most. Let me not forget about the Kiwi. They've got important data coming out on Wednesday. I think because we're in Australia, our focal currency this week is going to be the Aussie USD. Okay, so this is the one most under the spotlight. Having said that, pretty much everything is under the spotlight because there's data coming out left, right and center. Okay, if anybody has any questions at all, type them in, think about them, I'll answer them. If not, email them to me later. Alright, okay, so let's get up the charts, let's have a closer look, let's incorporate what I've just spoken about with what's happening with the charts, and let's see if we can decipher the data. Lois, I don't understand your question. Would I take note of the EMA? Do you mean like a moving average, an exponential moving average, or are you referring to something else? Alright, while you answer that, let's have a look at the Aussie dollar. Okay, so here we are. At the moment, I'm looking at this chart and it really does look like I don't want to trade it at all. Like I'm looking at it and I really don't like it. We had these lows that we broke there. We've broken up the top now. Everything that I tried to draw on it is just not holding out. The good thing is that we haven't been suckered into any trades at all. So at the moment, the way that I would play this one is I'm going to have to take a trade based on my fundamentals and on my gut feeling. Alright, so I don't want to influence anybody other than I'm just simply quoting out facts and figures. 24 of 28 professional analysts believe there's going to be a rate cut. How much that's going to be, I do not know. If we have a look at the movement in the last 3 trading days, we have already come down 230, 240 pips. Okay, now that 80 level, where is it? 80 is, give me one moment. Let me just draw it in. It's in there somewhere. That 80 level held its ground. I mean, we did peek through it, but basically it's essentially held and shot back down. And that was on the back of FOMC and everything that's happened, a bit of China and news and so forth. For the Aussie dollar, I don't really have a technically based trade other than I do get the feeling that what I'd like to see, if we were to get some kind of a rally between now and say tomorrow 9 a.m. So let's say across the European session today, we were to get some kind of a rally up here, I would be interested in taking a short purely on fundamentals and purely as more of a probability that we're going to get a rate cut more so than not. That's it. If the number that comes out does not help my cause, I'm not going to be stubborn about this. I'll jump out of the trade straight away. Alright, so please understand that. Alright. Okay, the question that Lois was asking was if the trend at the moment was down. Okay, so she's basically asking, what do I think if we're in a trade based on, say, a trend-based trade, like a T-chaser or something like that, what would I do? This is one of those circumstances, guys, where when there's in periods of extreme news data, the technicals kind of don't carry as well during those periods. So what I'm trying to say is I need to find a really good technically based trade, otherwise I'm not going to take one. Alright, so for the Aussie dollar, what I would like to see is a little bit of a jump over the next session that's about to come, and then maybe jump in on this at the 79 level. I would be happy at the 79 level if I could get a short around about there, which coincides with kind of this top area. That would be good, but it's really a trade based on nothing other than just me positioning myself for an anticipated rate cut. Alright, so that's all I have for you on the Aussie. I've looked at this chart already for so long today, and I haven't been able to find anything other than what I've just explained to you, purely based on anticipation of what might take place tomorrow. Okay, Karen saying we seem to have a broken down of an up channel in April. What time frame, Karen? And are we talking, so we're talking something of that way, that we've broken up? Kind of. Look, I'll stand my ground. We'll stay as it is with the Aussie dollar. Okay. Send me a screenshot, Karen, and I'll see if I can pick it up in time towards the back end of the class. Alright, EURUSD. Let's have a look. EURUSD. Now, I was talking how the EURUSD has been on this big rally. Remember, we were tracking an area of consolidation, and we were in the last 2 weeks, we were kind of in the middle at the time when we spoke, and then finally it broke up. All right, did anybody take a trade right there in this direction? Because that was the clear signal. I just want to know, did anybody take that long on the EURUSD? Lois did. Okay, great. Are you still in it? And for those of you who are still in it, who took it, are you still in it? So Lois, Rav, and Brett took it. Fantastic. All right, so there was a nice movement out of that. Okay, everybody that took it has closed it. Now, question for you, and I guess if you didn't take it, you can answer the question as well. That trade would have felt very uncomfortable to take. I took it and I was very uncomfortable about it. So I'm guessing that many of you would be uncomfortable about it as well. And the reason I say that is because you would have seen this thing just go already. How much pips is that? Move like 600 pips, and then you want to join in for a little bit of a ride, which took you an extra 150. Did everybody experience that? And especially the ones that saw it and decided against it? Was that one of the reasons that you did not take the trade? Okay, so the ones that took it all said yes, but they took it anyway. Well done. That's what trading is. Okay, trading is always going to, those feelings are always going to come into play. Okay, so Bijan traded it through the channel. I think he's saying he traded it through this section and closed it out. So he did it as a range trade, not as a breakout trade. Okay, well done. Now, notice what I'm thinking with the EURUSD for this week. It came up to that level, which I've marked out in grey, which was an old sort of support level, and it's hit it and it's bounced back. Now, if we do get pro-US data and weakness with the euro, all right, this is one that could really rock down. All right, so this is what I would like to do. Two options I have for this one. Option number one, if you are very aggressive, I could take a short at the break of this candle right here, meaning I can place the order right now. Okay, so if it was to break through there, that I'm choosing the low of this candle and shoot it downward in that direction. Now I've also noticed that that low has not been broken yet. Alright, so the other option is that this current candle now makes a bit of a comeback and let's say ends up there somewhere, and then that will give me an inside candle on the next day. When this candle starts over here, that'll leave me a fractal up there, okay, and then I'm going to try and trade it at the break of this one, which would be an inside candle. So those are the two options. Now the reason that I'm saying is if you're aggressive, I'd put my order right now, is because this candle may not close up here. It may actually come down and close down here, and if it does, then you've missed out on the trade. Alright, does everybody understand what I've just described? Yep. Okay, now it is a little bit aggressive. Now the reason I do like it is because one, it's hit this level. Okay, it's hit that level and it's shaping up to give me a candle with a fractal over here. Also, it's a week of Greece has to face up to the music. The US, things looking like they're going to be better than last time, and Euro being weak, it's a double-edged, so it increases the swing in this direction. Okay, so I like this trade. I'll show you another one when you can choose which one you like better. Alright, but that's the first one. That's the EURUSD. That's what I would like to plan for this week. So either place your order right now if you're aggressive I'll give you a level. The low of this candle is 1173, so you could get in, say, take a 4-pip break, so 1169 or 1168. Alright, so you're trying to jump it down here somewhere at it, 1168. Alright, as an example. Or alternatively, you wait for this candle to finish and then you can place your trade tomorrow only if this becomes an inside candle, because if it breaks down then you've missed out on the trade. Alright, let's move on to the next one. Let's have a look at the GBPUSD. Any questions on that? Rav is saying there's a T-chaser for the EURUSD. Which direction, Rav? It must be an upward T-chaser, I'm guessing. So this is one of those. I don't really want to change profiles on this chart right now because I've got an issue. Okay, so he's saying long. Okay. Some people are going to have a conflicting point of view right now. For those of you who know the T-chaser, I can see there's a few new people in the room that don't know it. It's a trend-based strategy. So, and at the moment we are in a trade that is saying to go long. All right. Now, based on the T-chaser, your stop would be here. All right. So sometimes this may do a bit of this and then turn around and do that as well. Okay. So if that was to happen, then in any case, if you're committed to it long, well then that's it. You got to stick to your trading rules. All right. And be long. On a shorter term, basically, when I talk about trades on a Monday on the market analysis session, I'm talking about trades for the week. All right, a T-chaser could be a trade that lasts for about a month. All right, I think when I did my numbers, the average time in a T-chaser for me was about 26 days, or between 23 and 26 days. All right, so what I'm trying to find trades for us on a Monday is trades that are going to last for this week. All right. Now, naturally, if you do take this particular trade, let me show you. Take it at least as a 2 to 1. So if you were to get in there, your stop is over there, so that's your distance. So 2 to 1 would put you over here somewhere. I'm just doing this visually. But remember, when you get to 1 to 1, do something. Move your stop, take some profit, take some kind of an action. You don't want to, your trade moves like 150 pips in your direction and you make no money out of it. Okay, so just remember that. All right. Okay, so I will move on now. Let's have a look at GBPUSD. GBPUSD. Did anybody notice that the GBPUSD hit 155, the big round number, or 140.54.98? It was so close, and then just made a U-turn. Basically, the GBP last week, very, very, very bad PMA manufacturing numbers caused this big candle, and it's shot it all the way down. The double whammy for the GBP this week is the elections. If the result is not one that is liked, then we could see further fallback on the GBP. My opinion here is it would be good to sell rallies. All right, so I don't really want to get in right now, but if this was to pull up and give me something about there, then yes, I want to hit it again. Okay. Just reading a couple of questions. Okay, Roy was saying yes, there was a long T chaser, also supported by the zigzag. Okay, fantastic. All right, so GBP this week, the elections is the headline act, and of course it's against the USD, so non-farm is also a big player in it. To be honest, we're kind of 2 days too late for this trade. I would have liked to have had a go at it there somewhere, probably here. There where I've just drawn that line for the exact same reasons that the exact same thinking that I showed you for the Euro USD. I'm kind of too late for that, so I just got to walk away from it. I would get a little bit interested if I get somewhat of a pullback, and then maybe I can hit it this way again. But at the moment, GBP USD, I'm just going to walk away from it. There's better trades for this week. Okay, someone's saying there's a fishing strip on it, and I'm being asked, is it a double top? Is it a double top? I'll ask the whole class. Who would call that a double top? Can I just get a yes or a no? A Y or an N? Who thinks that's a double top? Okay, wow, I'm actually a little bit surprised. There's about 30 people in the room right now, and I can count at least 20. Oh, it's even in it. Okay, slightly more people are saying yes, it's a double top. Okay, it's not a double top. A double top has to be more on the money. It has to be virtually like really, really more spot on. Okay, easiest way, if you just draw a line across them and the line's got an angle like that, try and fit it in so that the line doesn't have an angle. But if you can't, and I'm giving it leeway there and everything, it doesn't look horizontal, no double top. Okay, it would be just a trend line. All right, so yes, it's a trend line, but not a double top. All right, okay, let's move on. Let's have a look at gold. Wow, gold, look at gold. Gold is teasing us. I got a couple of calls last week about gold. In theory, for those of you who took your gold trade, you would have entered, I'll draw it right there. Okay, you would have entered the trade right there. And you would technically still be in this trade, because the way that you trade a triangle like this is you at least want to put your stop on that side over there. It's went backwards, it's coming back, you're kind of still in. Now, here's a question for everybody. Gold, if I get US dollar strength, what's going to happen to gold? Up or down? I'm just going to take off my jumper. It's a bit hot here. I'll let you answer the question. Give me a moment. Okay, it's unanimous. Only one person said up. Everybody said down. Well done. Well done, guys. Okay. If you think about it, when currencies are strong, the money moves to the currency. If the commodities are strong, then the money moves away from the currency. So, in other words, if the currency is weak, it goes towards the commodities. Okay. All right. So if we get that dollar strength that we are thinking we could get, that should make this fall further and allow us the pattern to play out. Okay, so if you've been in this trade already for 2 weeks, I would try and hang on at least until Friday. All right, and either I'll get stopped out on Friday or I'm going to hit my target. All right, so because there's nothing else that is showing, I'm not going to offer another suggestion on this one. This one still stays as we are. We are still in play, and in theory we want it to go further down. Okay, all right, let's move on. Let's have a look at the US yen. Okay, here's a tricky one that I want to talk about. We drew this last week, and I was hoping that FOMC gave us dollar weakness. Now, what's interesting is, and I'm not trying to be a hypocrite or anything like that, but what's interesting in trading currencies is how quickly points of view can change. All right. Now, I'm basically giving it to you the way that analysts are doing it. All right. So I'm analyzing the market as it's happening. Last week, the consensus was that if FOMC gave the indication that they were going to delay a rate hike, basically what was going to happen is the US dollar was going to collapse, all right, and it would have made the US yen fall down, all right, and it would have been a nice move, and I talked about it at quite some length, and it was a trade that we were really, really wanting to happen. Now, FOMC did not say that, and they basically said that we are data dependent, and it kind of just confused the whole issue. And it wasn't really so much the US strength. There was also yen weakening that caused this little bit of a move up. All right. Now, if we look at our triangle right now, we've broken out. And this is a really good. I want to ask the question so everybody can see it. Let me get rid of this line. When you do pattern trading, one of the biggest issues that you're going to have is that sometimes I can redraw the lines a little bit, and now this line kind of looks okay as well. I've got one touch, I've got two touch, and I'm on right there. Who thinks this line looks okay right now? Okay, so most people are thinking that this line looks okay. All right, so I think it looks okay as well. So I'm hesitant to jump long right now. All right, so I'm going to have to look at this one very, very carefully. If I get a clean break, if it goes up any further, I can't move this line anymore. All right, so this is it. This line is now locked in. I cannot compromise with it anymore. If it goes further and gives me something up there, it gives me no option than to basically take my trade. All right, and if I get the right combinations, the ones that I'm after, well then that's it. That's the trade that we're after, and we could be chasing 122, 123 by the end of the week. All right, so I just wanted to show you that sometimes you do have to move your lines around a little bit. It's not me fudging it, it's just what the market is showing us, and the more you do it, the greater your intuition will be towards it. Okay, so US yen, we are going to wait. I've just adjusted my lines, and I will trade this if I break it cleanly now. All right, fantastic. Let's move on. The euro yen. All right, this is the one that I really, really want. Have a look at this. Euro yen has been on a roller coaster ride upwards. just like the Euro USD, but because the yen has been weakening as well, this one's been moving quicker than the Euro USD. Alright, now I've drawn a line from A to B, and I've done my Fibonacci extensions, and I've hit 161, my 161 extension. Alright, what also, that level is very, very close to my 135 level, which is a big round number. We haven't traded big round numbers for a while because the market's been a little bit too volatile, and I've had to give it bigger stops. So basically I haven't done it for a little while. When the market runs a little bit smoother, it's a method that works very, very, very well. Alright, but nevertheless, the concept is still the same. Now, I've got a 1618 fib extension coinciding with a big round number of 135. Okay, 135.0. So what would I naturally want to do at that level? What's my natural trade? It's a sell. Okay, thanks Brett. So it's a sell. So how are we going to do it? If we wait, we got two options, and I'm going to give you the same two options as I gave you for the Euro USD. All right. On the yen. All right, let's have a look. If you're very, very aggressive, you can place your sell stop at where I've drawn that line there, which is, let's just call it 4 or 5 pips below this candle here. All right. Now the other thing is, this is a hammer candle. That one there as well. If we break the bottom of it, it's very, very strong reversal. If this is not broken by the current candle and we end up with a candle inside it like that, you're going to get your fractal up there, and then definitely tomorrow you place an order to break the bottom there. If I get this combination, this is the combination that we've traded for the last 2-3 months, so this is the preferred one. If you do not want to miss out on the trade and you are a little bit more aggressive, well then you can place your order right now, right down there, and hit the trade as it breaks down. If we break the top before the bottom, please cancel out your order. And so that you don't get triggered into the trade. Alright, is that clear? If this current candle just goes up and up and up and up and breaks the top here and breaks that top, well then come back and cancel out your order. As always with this trade, your stop's going to be just above there, and you're going to go for naturally for a 2-to-1 kind of trade, and we've taken some kind of action at the 1-to-1 level. Is that one clear for everybody? Yep, all good? Fantastic. Alright, so that's the Euro Yen. Now, one piece of extra information that I'll give you, if you notice that chart, and I'll go back to my Euro USD, we can see there's some similarities. Alright, the Euro Yen has moved further, like I said already, because of Yen weakening. So if take one or the other, if you take in both, just remember you're kind of doubling up on your trade. Not exactly doubling because they're not fully 100% correlated, but you're probably 1.5 times the trade instead of 2 separate trades, if that makes sense. Alright, so please take that into account. Alright, let me move on and let's have a look at the Kiwi dollar. Kiwi dollar. Alright, when we were speaking last week, we were in here somewhere, and we shot back down, and we've had the break. We've had the clean break. This could be the trade. This could be a really, really good trade, guys. Let me have a quick look at my Kiwi data. you've got to remember as well, the Kiwi is affected by Aussie data as well. Not this one, but stuff like these, it will affect the Kiwi as well. So unemployment rates and GDP price index. Okay, alright, so when's that? That's Wednesday. Let me go back to my chart. Okay, I'm just trying to play out how these candles may go. Alright, these are the options that I have for you. For those of you who want this trade, you can jump in right now at market. The trade is short, by the way. If you traded it this morning, you would have got this level, because that's where the market opened this morning. If you get in right now, you're actually getting a better price. Alright, so if you trade it right now, you'd basically be going into this direction there. Your stop, the closest that I would put my stop would be up here. Now, before anybody has a heart attack, go back and review last week's class if you feel that this distance is too much. I won't go into it, but the distance is, what is it? It's 200 pips. Alright? But as I review last Thursday's class, and it'll all make sense to you. Alright? And your target could be on this one here, because it's so far, we could go for, say, maybe 1.5. Does everybody understand what I mean when I say 1.5? So if my stop is 200, my target is 1.5, which would make it 300. Everybody understands that? Last week's class is an absolute must. If you did not see it, go back and watch it. It makes perfect sense. Alright, so that's if you want the trade, if you really want it. Now, there's lots of data that can easily stop you out or easily hit your target this week. Alright, we've got all the New Zealand data, and we've got all the US data and non-farm and a bit of Aussie data that affects it as well. So there's plenty of data to make this trade finish this week. Alright, second option is this. If you're a little bit more conservative, we'll just wing it. I don't like taking the trade back inside, because that would mean that it's kind of failed. So if you're more conservative, what I would do, try get in at this level there. Alright, which is, how much is that? You may not get in though. That's standard drama. 75.90. Okay, so you could put in a limit sell, hope that the market goes back, hits you, and then take the trade. Your stop is still at the same distance. Alright, so in any case, your risk should be a fixed amount of risk, whether it's a percentage of your account or a dollar amount, as we've already spoken, but that's how I would play that one. Does everybody understand what we are trying to do with the Kiwi dollar? This pattern is very, very dominant. It's a very, very dominant pattern, and it's been a long period of time. So I cannot just ignore this pattern. Alright, it would be silly to watch a pattern for a month, more than a month, and then when it happens, not trade it. At the very least, everybody take a demo trade on this, because you should get some experience with a live pattern. Alright, so that's the Kiwi dollar. Alright, so if you want it, you can jump in on it right now. If you want to get a bit of a better price, put in a limit order somewhere up there. There is a danger that you may not get triggered, but that's just the way that it goes. Okay, everybody's clear on that one? All good. Let me move on. Let's have a look at the Euro Aussie. Okay, Euro Aussie. The Euro Aussie is it moves almost inversely proportional to the Aussie USD because of the massive euro rallies and the drastic drop in the Aussie itself. We saw this huge candle on Thursday, this one here, which was like a 300 pip candle, this one here, alright, and that was accentuated euro weakness, euro strength and Aussie dollar weakness both happening at the same time, which basically accelerates the movement. Alright, this is a really good example. Also, while I'm on this, it's just come to my mind, so I'll just speak about it right now. Anybody that's ever traded shares, I'm talking physical shares like your BHPs, your banks, etc., etc. Okay, if you're a share trader, there's a certain amount of truth that shares fall quicker than they go up. All right, like for example, this morning, Westpac shares dropped they dropped 3%, like very quickly. So let's say a share price will drop quickly. All right, but when they go up, they tend to go up slower. All right. Now, does anybody know why that is? And is that applicable to currencies? Who thinks it's applicable to currencies? Okay, Paul says no. Karen says no. Rav no. Ray no. Okay. And Brett says to a degree. Alan no. All right, it's good. I always try and provoke everybody to think, so we all gain something out of it. The reason why shares drop off quicker than they go up is very simple. It's a physical share. What happens to a share if all of a sudden the company shuts down? Okay, Paul's saying fear. I'll come back to that in one moment. But what happens if you're holding a share and it shuts down? I worked for, when I was an engineer, my last engineering job, I worked for OneTel. Okay, does anybody remember OneTel? They were going down. It was Packard's son. He injected a massive amount of money into it, and the confidence came back into the market, and the shares spiked up, but you couldn't hide the fundamentals, and they just dropped and dropped, and they halted holding. So when it shuts down, basically you're left with your shares that you can't even buy an ice cream with. You can't do nothing with them. So they're absolutely worthless. They're worth zero. Okay? A country will always have a currency. Always will have a currency. They'll still be able to buy something. You may need 100 pieces of paper to buy a piece of bread, but it's still worth something. All right? That's the first reason. Now, I'll go back. Someone said fear before. The fear in shares, if it's all plummeting down, the fear lies in the fact that if it gets halted, they're worth zero, absolutely zero. In currencies, you don't own anything other than the currency itself, and it's a comparison between one currency and the other currency. All right, so we understand how shares can go down quickly. They go up, but not as quick as they go down because of that fear of zero value. All right, with currencies, it's simply a comparison of one currency's economy or one country's economy to another country's economy. So you could have two countries that are doing really bad. Say for example the Euro's doing bad and the Aussie's doing bad, and then it just comes down to a question of which one is doing worse than the other. And whichever one that one is, that's the direction that the currency's got to move. All right. So in this sharp movement upwards, it was Aussie basically had poor data, and at the same time the euro was on a high. So it's a double effect, and it goes up just as quickly as it can fall down. Okay? So don't be fooled. When you trade currencies, it can go up or down at the same speed. Okay? There you go. It just came to my mind. Sorry for the distraction. All right. So the euro. So basically what I've got for the euro is I don't want you to trade it this week. It's going to be a bumpy ride. If you want to trade it, there's going to be some good movements in it. If I was going to trade it, and I was going to trade it on the basis of RBA lowering rates, then it has to be long. Okay? It has to be long. Lois is asking me a question, very important question. What I said about stocks, does it apply to CFDs? Absolutely, because CFDs is just basically a reflection of the price of the stock. All right, so yes. All right, so Euro AUD this week, let's just leave it alone. If you purely wanted to speculate based on RBA cutting rates, then it would have to be long. The only downside is that this week we could get the reverse of last week, where we get strong Aussie and weak Euro, and it may just not do much at all because the combination almost cancels each other out. All right, let me summarize what we've done. Any final questions, please type them in. Let's have a quick look in summary. What have I got? Aussie dollar. 24 out of 28 analysts are thinking we are going to get a rate cut. The number that we are expecting is a 0.25 rate cut, which will bring us down to a cash rate of 2%. If that happens, I do think we're going to drop, but it's not going to be as massive as people think, because it's very, very anticipated. If anything other than a 0.25 cut takes place, we could see the market move much more in a much more volatile way. All right, that's the Aussie dollar. Euro USD, we have got a setup right now. If you're aggressive, take the drop of that little red candle where my mouse is right now. If not, you can wait to see if we get an inside candle with the current candle, and it's a short. All right, and the reason for the trade is we're trading previous support, new resistance, and somewhat of a pullback. All right, so we're not trying to trade it down to the floor. We're just trying to get a bit of a pullback out of that region. GBPUSD, we've kind of 1 day, 2 days too late for this trade, so we got nothing on the GBPUSD. Gold, we're still in. We're going to ride it. Non-farm will finally end this trade for us, or it will end it either way, in a nice way or a bad way. US yen, my triangle was readjusted. I think we cannot move it any more than where we are right now, and now we simply need a clean break out of that. We could get it. Look out for this trade. All right, US yen. Euro yen is the one that I like the most. You can place a pending break right now here, or wait for the current candle, see if you get an inside candle set up to go short. Kiwi dollar, it's on right now at market. Jump on it or place a pending at a little bit of a better price if it helps you psychologically. It's a strong pattern. The break is clean. Even if I jiggle around my lines, it's still broken out of those lines. And what helps me realize that is that it's taken that low out as well. Okay, see, these went lower than that. All right, so even if I was to move this line around and try and fit them in, every which way that I move them, this red candle has closed outside and it has taken out that level there. So there's your trade if you want it. Euro Aussie, we'll leave it alone for this week, and other than that I have nothing else. Go back and review last week's class if you're worried about the stop distances on some of the things. If there's anything you want me to have a look at, please email me, send me a screenshot. Any questions, email them to me and I'll be more than happy to answer them for you. Other than that, Any final questions before we call it a day? No, we're all good. Fantastic. All right, well, look, I'll see you all on Thursday at 3:30, and I'll see what I can dig up for us all. Other than that, have a fantastic week. Make sure that you are aware of those times, and I'll see you on Thursday. Bye for now.